I'd now like to introduce Joseph Jacks, who brings a very unique perspective to open source AI. JJ is the founder of OSS Capital, which is the only VC that exclusively backs commercial open source startup founders. He's an early investor in Stability AI. He led Cal.com seed round. He's an early investor in Bittensor, and very recently he led the $44 million seed round in a foundation model company called Liquid AI. Please join me in giving a very warm welcome to JJ.
Hello, hello. Awesome to be here in Toronto. That's, I think, maybe the second time I've been here before. I'm actually just curious, how many of you have heard of Bittensor before coming here? Wow, almost everybody. Cool, awesome. Yeah, the talk by Mog was great. I was actually hoping it would come after mine, because mine was like much higher level. So now we're going to go into the more boring territory. I'll kind of go over OSS Capital and sort of explain different things we've accomplished over the last 6 years. So I started our fund in 2018, and our mission and vision hasn't really changed much since then. We've been doing kind of the same thing. We really care about accelerating open source in the world and creating more open source technology in general. And so we had this idea of kind of focusing exclusively on open source companies, commercial open source companies. And my interests there were motivated by just personally having a big passion and interest in open source, but I was also very lucky to start the first Kubernetes company, which was created by Google. So thank you for creating Kubernetes, Google. And that was in 2014. I was super lucky to be an early evangelist of that community. I started KubeCon, which is the Kubernetes community conference. And that company had a good short run, and we were acquired actually by a business in New York. And then I started another open source company, was building a programming language compiler, a little bit experimental and academic. And then that company kind of fizzled off, and I started blogging about open source companies. So I was sort of like intellectually interested in that quite a lot. And so that was 2018, which was a very kind of prominent year for open source kind of M&A events and capitalism. Red Hat was announced to be acquired by IBM that year. GitHub was acquired by Microsoft. There were a few IPOs in the sort of open source company space. Hortonworks merged with Cloudera, which is a business actually also based on Google research, the MapReduce paper. And so it was a very exciting year in general, and kind of the idea of starting a fund like this started to make a lot more sense. And the blogging was kind of a natural progression of that. So yeah, I'll kind of just talk through the thesis of the fund and kind of get into why we're excited about Bittensor, which is like a really big focus of the fund these days. But this slide just kind of describes the evolution of the software industry in general. So started off with companies like Microsoft and Oracle in the 70s and 80s, creating what was originally called commercial off-the-shelf software, or COTS. And that was really where they, the producer or the creator of the software product would, create this binary, and then they would, put it on a medium that you would install on your machine. It was originally floppy disks, and it eventually became CDs and so on. This is before cloud computing and the internet came along, and that was really like the first distribution model or business model for software companies. And the second big business model obviously is SaaS, and so we're all familiar with that. You host the software as a service, you charge for per user or for some data limit or some compute limit, and you have some pricing model that basically gates access to the technology. In our view, the next evolution kind of iteration of the software industry is this commercial open source approach. So I kind of coined this acronym, COS. Whether or not that sticks, it's TBD. Some people are using it. You can say it means commercial open source software, or you can say maybe commercial open source startup. Pick your flavor. But there's some examples of these companies that have really pursued this model. They've done it all very differently. They're supported by different types of investors and different approaches. But some of these examples are probably pretty popular with folks. And these are pretty big businesses. Many of them have gone public and were worth $10-20 billion each. A lot of them were sort of acquired by larger companies. And it's really kind of an evolution of SaaS. You're still taking the open source and building some commercial paid version of the open source technology, like a cloud service or an enterprise version or a pro version. And that's kind of the business model that most of our companies pursue. So this slide is something that kind of just describes the differences between the sort of the proprietary closed core software development approach for capitalism, essentially, and this open core commercial open source approach. And obviously, this is like a perfectly smooth curve, simplified, but the general thesis of the fund, and this is kind of picking off of Mark Andreessen quote, "Software is eating the world." We think open source itself, as a sort of paradigm and a development approach, is actually eating software itself at a faster rate than software is eating the world. So software is eating the world has kind of succeeded. There's tons of these industries that now have really great, powerful, digital software products behind them. But really, if you sort of pay attention to the markets and sectors where the proprietary closed products have really started to succeed, there's this sort of inevitable tsunami of open source alternatives that pop up. So how many of you are familiar with the Hacker News open source alternative of the week? You look at the Hacker News page and there's there's an open source version of XYZ that's kind of popping up. When I started OSS Capital, this was far less frequent and common, 5, 6, 7 years ago. And now it's kind of every time you see a successful proprietary product out there, there's tons of developers going out and getting accepted into YC or bootstrapping their companies, raising money, and it's a pretty exciting movement. So just to kind of explain the differences, and this is what OSS Capital's been really focused on, we think of the world as being two buckets. There's closed core companies where the core technology is proprietary, and there's companies that are open core where the core technology is open source. The tricky thing with these companies is they're really paradoxical. It's really hard to reason about how open source businesses work, because your core thing is for free. It's given away. You have this big community of people, and your community is somewhat kind of competing with you in terms of the commercial strategy. And so what we tried to do was break down the definition of these companies in a concrete way with this definition, and then point at all the differences and the reasons why they're so different. And so this is kind of a first principles way of looking at it. Commercial open source companies are definitionally sort of any company that would not exist without the coexistence of some core, largely singular, sort of a single open source technology. So by example, these are companies on the left, and these are technologies on the right. And you can kind of get a sense of the relationship between the company and the core technology, and it's obviously pretty fundamental. Going much deeper here, I was mentioning the blogging that led to starting OSS Capital. You don't have to read my blogs. This is the distillation of 2 books worth of blogs I did over the years in one slide. Obviously, lots of density here. The big detail to pay attention to is the one on the very bottom, which is this tight coupling versus loose coupling dynamic. This is kind of an engineering analogy. With closed core technology companies, which is kind of 95% of all technology companies, these open source businesses are more unusual and uncommon and more fringe. There aren't that many of them actually. But the core difference between these two that you can kind of look at and then reason up from on all these other dimensions is that proprietary technology businesses or closed core businesses, their core technology is tightly coupled to their company, right? Which means that only they can monetize that technology. Only they can control the development and gate access to it, and so on and so forth. Whereas open core, sort of open source businesses or cost companies, the relationship between the company and the technology is loosely coupled, which means that you don't actually need permission from the company to contribute. You don't need permission from the company to even monetize and actually control and influence that technology. And so that's the beauty of open source. So yeah, OSS Capital, it's a small fund, myself and two people. We have a CFO. We don't talk too much about our capital stuff, but we recently just crossed managing over $1 billion. We've invested over $100 million in about 70 companies. We really obsess over the sort of fast-growing open source projects on GitHub. That's where most of them are hosted. So we have 1 million GitHub stars under management in our portfolio. These are very capital efficient companies. They're sort of based all over the world. The companies are represented by over 15 countries. The valuation is not including Bittensor, which I should probably include in there if sort of look at the token price of the Bittensor network. And yeah, we're really grateful to have so many awesome open source founders that have trusted us and decided to work with us because of our domain focus. This is just kind of a list of a lot of the portfolio companies. I know Cal.com was mentioned before. They're pretty well known in open source startup land. We're one of the first investors in Blue Sky. which is a sort of a Twitter alternative social network. They just crossed 10 million users recently from zero a couple years ago. Liquid AI just announced their models today. They're actually out with a family of very competitive models to some of the largest open models like Gemma and Meta's Llama models. We're first early investors in OpenBB, which is like an investment research product, kind of similar to Bloomberg Terminal. Dub is sort of a link management sort of Bitly Linktree tool, and does a lot of really cool things in addition to that. So a bunch of different tools, lots of low level infrastructure, software developer tools, as well as like application level things. So like alternatives to Airtable and Notion and TeamViewer and different databases and so on. One that's making a lot of news these days is on the bottom right, which is W4 Games. W4 is the company behind the Godot game engine. So Godot is a 2D, 3D game engine and a pretty big open source community. So these are our investors. One of the things that I'm really proud of at OSS Capital, it's taken many years to kind of build these relationships. Two of the local folks here in Canada are Bob Young and Toby from Shopify. Bob is also the owner of the Thai Cats, who I think are on a winning streak. Who's familiar with the Thai Cats in the audience? It's like, oh, cool, awesome, handful of people. These are really awesome entrepreneurs who've kind of created different businesses over the years. Most of them are open source founders who've created like really large and impactful open source companies, like Matt Mullenweg, the creator of WordPress with Automatic, Bob Young with Red Hat, Elliot from Mongo, and a bunch of others, and obviously Tom from GitHub and a bunch of other folks. So yeah, we also run a conference, as every domain-specific VC should. It's called Open Core Summit. We're actually spinning it off pretty soon because it's a pretty big effort at this point. But we've been doing that for a few years and kind of bring together all the different kind of technology industry stakeholders that are really interested in these open source companies. So like people from the enterprise side that are like on the more of the customer end of the spectrum that actually purchase these kind of tools as customers. The cloud providers who love hosting open source projects as a service and kind of offering those to their customers. Pretty much every generalist VC at this point, from really having no real presence a few years ago to being extremely present and deploying orders of magnitude more money than us, is really interested in this kind of big trend of open source companies becoming a big deal over time. And then of course the companies themselves. We really try to bring together the founders of the previous generation successful open source businesses and kind of get them to transfer their learnings and insights to the kind of the next generation of entrepreneurs. So that's OSS Capital. I've been doing that for 6 years. I learned about Bittensor early last year. And just for clarity, OSS really is not a crypto investor. We don't invest in Web3 or blockchain or sort of like token-based projects. We've actually only done that twice. One was sort of by the suggestion of one of our investors in our first fund, which is actually also a local Canadian company called Parallel. They're a game studio. And then the second investment we did was Research Hub, which has an ERC20 token, and it's kind of like a GitHub for scientific publishing. And Brian Armstrong is the co-founder of that. And we learned about Bittensor early last year, and originally had a lot of skepticism and kind of concerns for a lot of reasons, like the documentation wasn't great, couldn't really fully grok UMA consensus, and it was just a very early network at that time. We didn't have these things called subnets that Mog articulated, and but it took some time. It's kind of a year of developing conviction, and then early this year we announced that we'd be committing $25 million to invest in the project and the community and the token. We've deployed about half of that into basically just purchasing the token from early miners and some of the large holders. And if you follow me on Twitter, you probably are familiar with my endless bull posting of Bittensor, which is maybe a mixed bag, but I am very excited about the project. So to wrap up, and this is my more high-level sort of introduction to Bittensor, I would definitely encourage folks, if they want deeper kind of technical points of view from someone who's been mining and validating and developing on the network for years, to talk to Mog more extensively than me. But the way I describe Bittensor in terms of how it aligns with what I care about, like my philosophy, is kind of by asking this question. So what if anyone in the world, without the permission of any government or entity, could contribute to and own the most capable AI that humanity could collectively create. And I think I want to put an emphasis on capable, most capable, and the collective aspect. Like what is humanity actually capable of on a collective basis, as opposed to sort of like these 4 or 5 mega corporations that are very far from being collectively representative. And so that's Bittensor. It's just really as simple as that. It's a network that permissionlessly incentivizes the continuously improving production, as Mog described, of AI. And that's a very broad, amorphous thing. So you might initially go and say, what is AI? Is it sports betting? Is it, pre-training LLMs? It's kind of all of those things. And you could think of Bittensor as a very different blockchain as compared to other blockchains. It's not like Ethereum. It's not a DeFi financialized, sort of chain where every account is sort of the building block, and it's more financially oriented. It's not Bitcoin, where you have one incentive mechanism for solving like SHA-256 Merkle hashes. That's Bittensor. Bittensor is like one incentive mechanism, like hard coded, and the incentive basically encourages and pays people to do these hash functions. Bittensor is really a fractal. And I know this is a big slide. I'll try to kind of talk about it as quickly as I can here. But the big thing about Bittensor that I find also very unique and different from all of our other investments that we've made is it's actually not owned or controlled by VCs. There was no pre-mine. There was no pre-token sale. There was no startup that created the chain and there's equity investment. It was purely done in the open by a developer community, by the founders, Jacob Steves, who actually was a Google Brain engineer previously, and Ala Shabana, who's, as was mentioned, a professor at Waterloo in computer science. He was doing his postdoc work there. And it's really fascinating to see also the ownership base of the network is very decentralized. I get accused quite a lot on Twitter for being like one of the large bag holders and significant investors. We do have $10+ million investment in the network, but we're actually not even a top 20 holder. And our view on the founders actually owning far less than 1-ish% of the network each is that it shows how well engineered and well implemented the incentive of the network has kind of been executed from the early days to today. And there's quite a long tail of holders that might just have 1 or 2 Tau and they're just part of the community. The network has been evolving, to use a Mog phrase, or adapting, let's say, extremely quickly. And if you look at it in isolation, it's sort of one snapshot, kind of like a still frame from a movie. Like you're not going to get the whole picture. You have to watch the movie, right? And if you've only seen kind of parts of it, I'm not going to go down the movie analogy too far, but you have to really kind of pay attention and let it really reveal itself to you and see how much activity there is on the network. So a year ago, subnets didn't exist. And as Mog was describing, subnets are a slice of the network. They represent a synthetic basket of the overall token supply, which kind of mirrors Bitcoin, by the way. There's 21 million of these. They get emitted over 100+ years. We're in the first 4 years. There's four-year halving schedules. We're in the first 4 years now. There's only a year or so left of that. So the emissions are extremely high, very high rewards on the network. And from the time that subnets were launched to today, we've seen, I should probably correct my slides. It sounds like there's 50 subnets. I think that the hyperparameter on the number of subnet slots is kind of gradually getting relaxed more and more. So I'd imagine if we fast forward a year, there's probably going to be 100+ subnets, maybe even hundreds. And we've really just seen, I think it's kind of incredible, like a Cambrian explosion of open source developer activity, joining the network and actually solving these puzzles, solving these incentive mechanisms that are designed by the subnet owners, from doing things like protein folding, like Mog mentioned, to parallelizing API token access and data generation, synthetic and organic, to hosting GPU compute, to obviously pre-training models, building models, and even fine-tuning models that are already accessible from the open weights providers. And as Mog also mentioned, there's a big upgrade coming in terms of how the token emissions are actually allocated to the subnet. subnets. Right now, it's much more kind of concentrated in the validator pool, which is certainly finite, but is built up by people who are very early believers in the network, and that built up these validator infrastructures. Over time, you'll basically see anyone who holds the token can actually act as a sort of laissez-faire capitalist free market voter of where their stake gets allocated to different subnets, and it's going to be a really exciting, probably disruptive shift for the project. But what it does, I think, is, as Mog was saying, is it creates a much more democratic and fair way of allocating the resources, and very much like a free market capitalist kind of way. And so I think we're all very excited about that. Tao's been trading on a lot of the top exchanges. I think Coinbase is probably 6-9 months away from the things that I've heard. It's been totally organically listed with no company doing these side deals of sending a bunch of tokens to the exchange and doing the bribe dance. That's extremely impressive. If you look at probably all of the top 10 or 20 tokens that are behind Ethereum, there's a company that was VC funded that's doing these side deals with the exchanges, and it's a much more kind of crony system. And Bittensor's been completely democratic that way, which is really amazing. And we think that over time, the thesis, I'll just kind of leave it at this. Our view is that if Bitcoin is, cryptographically with a token incentivizing the continuously sort of refining and production of money, of sort of like digital gold and digital money, Bittensor is cryptographically token-based incentivizing the continuously refining production of intelligence. And so if you try to kind of assess like which one of those things will actually accrue more value over time, I think it's pretty easy just to look at the world and see how large currencies are in general relative to how large equities and assets. And now we're seeing a big repricing with AI getting better and better. And so our view is that Bittensor, if it really works, and people from different communities that bring in different skill sets that have domain knowledge that doesn't yet currently exist on the network, start to participate in these incentive mechanisms and actually create new ones and improve them, it actually establishes the foundation for something that could really be truly open AI, and in a sense where you don't have this rug pulling and this kind of like I call him scam altcoin. So it's a sort of like a wannabe antichrist type person, trying to pull the wool over everyone's eyes. So I think that it's just a really exciting moment for the world to kind of learn about this system and participate in its early development. And the thing that you really have to remember, which is just really crazy, is the entire network didn't exist 3 years ago. Subnets didn't exist a year ago. And the pace of improvement is pretty incredible. So for us, we're encouraging all of our companies to get involved. We're spending quite a lot of time on the network. There's some pretty well done developer docs. They're improving. There's some bugs. There's some delays on new features that get rolled out. But in general, the docs are actually really impressive. Shout out to Mog's TauStats project, which again is kind of like the single pane of glass view for looking at subnet activity, the emissions flow, the validator network. This is a few weeks old. The token price has been going up quite a bit. Our view on the token is you buy some and just hold it for 5 or 7 years. Don't trade. This is going to be a very volatile project in the same way that Bitcoin was very volatile early on. Having tools like this is really valuable for the community, for developers. A shout out also to Tau Market Cap, which is kind of like a nod to Coin Market Cap. This gives you sort of a sense of the emission and incentive that subnets on an individual basis are actually receiving, different dashboards, more statistics, and more good stuff to learn from. So yeah, that's my talk. Happy to answer any questions.
So, great talk, and
Thanks.
it was very interesting stuff. And dialing back into what Mark was saying as well, I guess my question is 2 parts. The first part is, how do you think of, how does the incentive curve be stable when the underlying token price is so volatile, when the incentive structure is constantly changing? And the second part of it is that as the proliferation of these new tokens come online, maybe similar tokens, there's just going to be a lot more supply of tokens like these, which on the secondary markets, will that not depress the price of a token like this?
So I think the second question has some gaps on the way the network will operate. So these subnet tokens, these are sort of like synthetic slices of the overall token supply. So there wouldn't really be a secondary market for that. You still have to go through Tau to actually convert into the subnet token. So I don't expect that sort of price dynamic you mentioned. Your first point is very true. Your first point of like, any system where you have speculative financial trading, so for example, there's a large fraction of the Tau holder base that is completely non-technical and purely trading the token based on the narrative, right? So if you go on Twitter, or as known as CT, crypto Twitter, I guess it should be CX at this point. All the acronyms need revision constantly. This is very annoying. There's a lot of people that are really just purely like, this is the next Bitcoin and not really understanding the fundamentals. And so that does create volatility. That creates a lot of short-term price uncertainty. And obviously, this is definitely reflected in the way that like the miners and the subnet developers think about really investing the absolute highest quality time, resources, and capital. My view over time is that this is going to be a volatile asset, and it's going to go up and down. I think that's probably due to two big factors. One is just that it's a crypto token. It's traded on exchanges. There's lots of volume. It's hundreds of millions in volume from zero a few years ago. Now you're just seeing people just go and trade it as an asset. That happens with every company that's public, by the way. You could have Amazon totally execute really well and deliver, and for some macro reason, the stock goes crazy. Early Bezos letters where the stock price is not the company. Those are two orthogonal variables. The same is true with this. There's a lot of really incredible developer activity and contribution and commodities getting produced, and the token price could be going sideways for totally unknown or separate reasons. So I think that there's always a risk in that. I think over time, crypto is probably going to introduce more interesting abstractions that mitigate some of that volatility. And so my personal view is I think the most successful utility of crypto so far that's been really proven out to be extremely relatable for people is this thing called stablecoins, where you can basically trade in and freeze the volatility by converting your token back to something like USDC or USDT. And there's probably going to be perhaps a native stablecoin introduced into the Bittensor ecosystem, or maybe just converting back to something where you can earn your emission and then freeze it in a stablecoin and mitigate some of the volatility. But yeah, that's kind of how I think about it. Anyways, thanks everybody for your time.